Hello traders, my name is Horvat and welcome to a new intraday video. Actually, I see some very interesting patterns on the S&P futures and DAX. Potentially, we could see a retracement to the downside, even if it's just a correction, because on the S&P, as you know, the market maybe found a temporary high here at 2075 because of this recent decline that can be counted in 5 waves here on the hourly chart. So we expect more downside after any 3-wave bounce. We can already see a 3 waves move to the upside, but I don't think that this weakness will resume until the US opens, so be aware of more sideways price action. I see some resistance for the S&P at just above 2060. Okay, maybe 65 is the upper limit. There was a small open gap. It was on Sunday. Also, we have former 4th waves here, so definitely I would be expecting a downtrend continuation from those levels between 50 and 61.8%, which is also ideal resistance fib level for corrective waves. So the S&P 500 is pointing to the downside, even if just for a wave C move lower that is part of a corrective price action. That's fine, but still there is room to make some money on the downside. Now German DAX. If the S&P will be heading to the downside, then you know that German DAX should also find some limited upside. And interesting was today this spike to the upside. This is the 4-hour candlestick, still not closed, but looks like that we are in a 5th wave. Maybe we will turn down soon for this corrective wave 4. Okay, so I see here limited upside. Also there is some bearish divergence on DAX, and we are definitely slowing down around this very important psychological level 10,000. So definitely I would be looking for a 3-wave retracement in days ahead. Okay, I would not be buying market at this price. If I want to be involved in DAX, then I will wait on a pullback. So if we consider the potential 5 waves drop on the S&P that suggests more weakness, and this DAX at the resistance now, then we know that market will probably move even lower, and if that will prove correct, then yen should rise. Okay, now so if you're an FX trader, then in a risk-off environment, which means lower stocks prices, you would be looking for buying opportunities on Japanese yen. Now yen has been moving strongly to the downside, with the dollar yen trading close to 119. But as I said, if stocks will move lower, then we will see some yen strength. Okay, so actually I will compare this S&P with yen crosses, so that you will actually see which yen cross is the weakest pair. Okay, in other words, which pair on yen crosses is the best one to trade if on the downside, if the S&P and DAX will fall. So I will compare this S&P to ASEAN. We will also add Euro Yen, and let's do dollar yen, obviously, and we will also add pound yen. Okay, so this is now a very messy chart, but just let me switch to line chart, and you will actually see that markets were here trading in the same direction with the S&P, which is in orange. Okay, you can see that the yen crosses are following the S&P. So if the S&P will top out, has topped out here, then we can expect more weakness on the S&P. Sorry, on yen crosses. Well, so if you are looking for trades and don't know which trade would you like to pick, then obviously you should look at these correlations. And on this chart, let me switch to 8 hours. And on this chart, I can see that one line in the black is the lowest. Okay, let me check daily. So okay, here's better shown. So one in black is actually Aussie yen. Okay, so if you compare Aussie yen to others, you can see that Aussie yen is the weakest. Okay, which means that I would not be surprised to see much lower Aussie yen prices if the S&P has really topped out. Okay, so from a trading perspective, Aussie yen could be the best pair to trade on the downside. So that's why I sent you a wave count yesterday for Aussie yen, because I also think it's very interesting. We have a 5 waves drop from the highs, okay, and then we have some slow pricing action now, which I think it's correction. Notice that this move is much slower and longer in time compared to this decline. So this is an impulse, this is the primary direction of a trend, this is the counter-trend movement, which means I would be expecting a resumption of a downtrend very soon. So ideally we will see another swing high here, a fake out, maybe towards 101.14, then strong reversal to the downside. So there's also 61.8% retracement area in this at those levels. So for shorts, I would be interested from here. Also because maybe some traders are already holding shorts here with stops above this wave B to limit any losses, but a nice spike to the downside above this wave B would send those traders out, and we will get back in. Okay, so that would be quite a nice psychological reaction from the market. So I will be looking for potential shorts here in wave C, maybe 101.40 stops. Usually when I'm looking for corrective waves, I would not love to see any retracement more than 78.6. Okay, so if I'm looking for shorts, like in that case, I would be looking for stops above 78.6. Okay, there was also a nice swing high here, so maybe above 102.45, 40, around there could be enough. Okay, on the downside, obviously targets are open, but minimum expectations suggest a drop beneath 100 psychological level. So once again, based on the 5-wave decline on the S&P, based on potential topping German DAX here, with a 5th wave in wave 3, I think that there is a chance for more downside on within a risk-off moves, which should pressure to the downside yen crosses as well, and ASEAN could be a very interesting pair for some shorts. Okay, traders, that's it for now, and I will catch you with new updates on our Intraday update page. Have a good day.